Question paper of June 2025, and we are going to look at a question on the cash flow statement, and that is the statement of cash flow. So our question is our question 6 on the question paper, and it reads extract of statement of financial position of LC Limited as in 31 December 2024. So you're given a statement of financial position that you need to go through before you start to answer the question. So you are also given additional information that you need to go through before you start to answer the question. So you've got the continuation, and then we've got the required part whereby the first part needs you to draft the statement of cash flow for the year ended 31 December 2024, show the calculations in brackets. So only the cash flow from investing activities and the cash flow from the financing activity section. So we take note the question only requires the investing activity section and then the financing activities section. So with that, we move on to the second part, whereby it leads us to do the following notes. We've got the reconciliation of net profit before taxation to cash generated from operations, and then we've got taxation and dividends paid. So obviously, these are calculations of taxation paid and the dividends paid. So, but you cannot prepare the statement of cash flow without first doing the notes, because the information in the notes are supposed to be transferred to the statement of cash flow. So in that sense, we are going to start on 6.2.1. So 6.2.1 is on the reconciliation of net profit before taxation to cash generated from operations. So on our reconciliation, we are supposed to start with the net profit before tax. So we are saying net profit before tax. Then we check according to the question, what do we have in terms of net profit before tax? But we are given it here is 73,420. So we indicate as such 73,420. So then from there, we are supposed to go to adjustments. So we can just say adjusted for. And then on adjusted for, we are supposed to look for non-cash items. So we are going to adjust for non-cash items beneath. And also, we are supposed to adjust for interest paid if it's there, interest received if it's there. So those are some of the items that we should adjust under the adjusted for section. So why do we adjust non-cash items? Remember, this is a statement of cash flow, so we have to remove all non-cash items. Remember, we have adjusted for depreciation in the statement of comprehensive income, which is a non-cash item. We have to remove it. We have got items like profit or loss on disposal. We have to remove them again. And also, the adjustment of interest is a cash item, but why we adjusted other cash generated from operations, it's because for disclosure procedures, we are going to readjust again interest in the statement of cash flow under operating activities. So we take note of that. So with that, we can look for non-cash items that we have in the question. Of course, we see we have got depreciation on plant and equipment, which is 27,870. So we have depreciation. So the figure for depreciation that we have is 27,870. 27,870. So initially in the statement of comprehensive income, that is the income statement, depreciation was subtracted. So by removing it, we are supposed to show it as a positive. Then we go to the next part. We have a profit on sale. Profits. Profit on sale of plant and equipment, which is 980. It's also a non-cash item that has to be removed. Profit on sale of plant and equipment. So we have a figure of 980 rands. So we can put it as 980. And remember, initially, the profit or sale was added in the statement of comprehensive income as an income. But in this case, we are removing it, so we do the opposite. So we're supposed to subtract. So we put it in brackets. So going on to the next item. So you'd see that we have other items that we have of dividends received, which are going to be readjusted again. Interest received. We also check for any interest that is there in terms of interest paid. We are going to calculate for that. So for dividends received, we have got 8,660. An amount of 8,660. So remember, dividends received is an income, so it was added in the statement of comprehensive income. So now we are doing the opposite. We are subtracting. Then after dividends received, we've got interest received again, 5,842. We have 5,842. And obviously, this was an income again, so we have to add it to, we have to subtract it, sorry, to remove it. Then from there, we are supposed to calculate it to find a net figure, which is supposed to be our operating profit before working capital changes. Operating profit before working capital changes, which we are having here. So when we calculate here, we are supposed to get the figure 105,648. So before we calculate, we are supposed to also include finance costs. Remember, finance costs includes the interest on loan. So we go back to the question to check what is the interest. So we go to long-term borrowings, and that's where we can find the interest, of which we are only given the amount of loan. We check additional information to see what can be the figure for our interest, our finance cost, which is going to be our interest. So we go through the information that we have. So if you look at the information that we have, you see that we do not have interest expense, and the loan that we are given, there's no interest to show that how we can calculate the interest or the finance cost for the period. So in that case, we refer back to our answer section. So we see that we have the total we have the figure for operating profit before working capital changes, which is calculated after all the adjustment. So it means our finance cost, we are going to get it as a balancing figure. So basically, if you calculate there is a balancing figure whereby you are going to say 105,648 plus 5,842 plus 8,660 plus 980 minus 27,870 minus 73,420. You are going to get your finance costs as 19,840. So it's going to be 19,840 as a balancing figure. So that's what we have on that part. So from there, we move on to working capital changes. Remember, working capital changes includes the current assets and the current liabilities. So components of the current assets and components of the current liabilities are their changes. we are going to indicate them under working capital changes. So in that case, we go to our question, try to see what are the components that we have. Of course, we do have inventory. So when current assets increase, it's going to be a negative in the calculation of cash generated from operations. So inventory, we see that it is a movement that is there from 165,290 to 118,819, which is an increase. So we find the increase by saying 181,819 minus 165,290, and the answer that you are supposed to get is 16,529. So you get 16,529, which is the increase, and that increase is going to be shown as a negative. So we come here, we indicate that as an increase. Increase in inventory, of which our increase in inventory, we have 16,529, which we are going to show as a negative. So which means the decrease is shown as a positive. So we go to the next part whereby we are saying after inventory, we have traded other receivables. Traded other receivables, it's a movement again that we can notice from 120,690 to 132,759. So this is an increase again. So if you find the difference now, if you subtract the two, you are going to get your answer as 12,069. So you have 12,069, which is an increase again, which is supposed to be a negative gain. So we come to our answer section, we indicate a search, whereby now we are saying increase. Is this increase in trade and other receivables? And then we got 12,069, which should show as a negative. And then from there, we go on to see in terms of other elements. We now go to current liabilities. We have got traded other payables. It's a movement from 195,400 to 214,914. So that's an increase in trade and other payables. So the increase again, we calculate it 214,940 minus 195,400. We get an answer of 19,540. So for current liabilities, it becomes the opposite, and increase is shown as a positive. So we are going to show it as a positive. So we come here, we indicate as an increase. So it's now increase in trade and other payables. And then we got it as 19,540, which is a positive. Then from there, we are supposed to adjust for our working capital changes, whereby we calculate the net figure now by saying our 16,529. So it's a negative 16,529 minus 12,069 plus 19,540. You're supposed to get your answer as a negative 9,058. So we have a negative 9,058. Which is a negative. So we can show it in brackets. So that's what we have. So it means by saying 105,748 minus 9,058, you're supposed to get your cash generated is 96,590. So that's what we have on that part. And then from there, we move on to the next part, which is now on calculation of taxation paid and dividends paid. And of course, in this statement, we are supposed to start with opening balances, whereby we can say amounts are at the beginning. But we check what we have in terms of the question. We see that taxation paid is represented by taxation payable, which is remember this is the column for beginning and this one is the end. So in terms of taxation payable, it's under current liabilities. So it means it's a payable, which is 45,000, 524. And then if you go to your dividends, is represented by your shareholders for dividends, which is also under current liabilities, 12,582. So for opening balances, we can give a description that it's amounts payable at the beginning of the year. At the beginning, so we check the amounts that we have. For shareholders for dividends, 12,582. For taxation payable, 45,524. So at taxation, we are saying 45,524. Then for dividends, we've got 12,582. Then from there, we now calculate the amounts according to the income statement. We try to find what we have in terms of amounts according to income statement. So what is there is that we are looking for the taxation amount for the period, which is supposed to be the income statement, and then the dividends amount for the period that is supposed to be in the income statement. So we refer back to the question. So we see that we can get that in the extract that we are given. We see that we do not have for taxation. We have got income tax expense. We're given it as 38,208. 38,208 is the income, is the tax. 38,208. So we come here, we enter for tax. We are saying 38,208. And of course, we look for the dividends amount. So for dividends, we try to see our dividends declared for the year amounted to 31,320. So these are the dividends, the amount for dividends. So we come and put it 31,000. 31,320. So we are supposed to add these amounts that belong to, that is for the year. And then from there, we are supposed to subtract the closing balances, that is balances at the end. So if you come here, we check again what are the balances at the end that we have. We go to the list of balances. We see that we have got shareholders for dividends is 15,228. 15,228 shareholders for dividends, which is the amount for dividends. Balance at the end, and then we've got taxation payable. We have got 27,476. So we include those as our closing balances. So here the description that we are going to give is amounts payable at the end of the year. At the end, and we're given them as 27,400, 27,476. And then the other amount of dividends is 15,228. And the balance at the end, we are supposed to show them as negative. And then from there, we can calculate to find the amount paid. So the description that we have at the end is amount paid. So on the taxation column, we're saying 45,524 plus 38,208 minus 27,476, and we get 56,256. And then in the other column, we're going to get 28,674. So these are the amounts that are supposed to be transferred now to the statement of cash flow as taxation paid and dividends paid. So this is what was that part. Then from that part now, we can now go to the statement of cash flow, whereby we are going to look at the cash flow from investing activities and cash flow from financing activities. So in terms of cash flow from investing activities, we can check according to which items of investment activities that we have. So if we're back to the question, remember, any movements in non-current assets indicate investing activities. So if you come, you see that we have got plant and equipment with a cost price of 14,000 and a carrying amount of was sold during the current year. So this one was sold. And then 124,000 of the current year's purchase of property, plant, and equipment. So 124,000 indicates plant and equipment that were purchased. So we included under investing. So these are additions of plant and equipment. So the amount that we have is 124,000. And then we check again on the next part. Of course, we put a plant and equipment that was disposed. So we want to see the proceeds from the sale. So to find the proceeds from the sale, we can say we are given the carrying value, which is the carrying amount 4,811. And then we are given the profit on the sale, which is 980. So we can add the two, 4,811 plus 980 to get the amount that was received. So we are saying on this part, these are proceeds from the sale of plant and equipment. So it's just proceeds from sale. So in brackets, we are saying 4,811 plus 980, the profit on disposal. So if it was a loss, we are supposed to subtract it. So we get our answer is 5,791. Then we check in terms of fixed deposits, movement in fixed deposit. Fixed deposit is adjusted under investing activities. Fixed deposit, we see that it's a movement from 215,000 and 215,010 to 221,686. So this is an increase of fixed deposits. So when it's an increase, it's an outflow. So we should show it as a negative. So we are saying increase in fixed deposit. So when we subtract the two, we subtract the two, we are saying 221,686 minus 250,010. You're supposed to get your answer as 6,676. So no other section, we are saying increase in fixed deposit. And we get 6,676 as a negative. So this is what we have. And then we check in terms of our planted equipment. We are given our figures as balances at the beginning and balance at the end. So we can use those figures to verify if they are balancing. If they are not balancing, the balancing figure should also be adjusted. So we come here, we form a T account. Remember, with this T account, we are going to say for our planted equipment, we have got balance at the, remember, this is cost price. So we are saying the balance at the beginning should be on the debit side, which is 468,513. Then balance at the end should be on the credit side, 639,968, which is this one. And then since these are costs, we are supposed to take into account the depreciation amount. It's supposed to be, these balances should be the carrying values, but in this case they're given as cost. But we see that in the statement of financial position, we do not have any depreciation. The plant and equipment is not depreciated to date. We only have depreciation for the period. So we are only going to take into account the depreciation for the period, which are given as 27,870. Then it should come on the credit side, 27,870. So that's the depreciation that we have, 27,870. And then with that, we check again. We got 27,870. Then the equipment that was with the cost price 40,000 the carrying amount was sold. The equipment that was sold is supposed to be on the credit side. Remember, the cost price is 14,000, so it's going out, so it's supposed to come on the credit side. To remove it, 14,000. And then we've got equipment that was purchased. We have got 124,000 is supposed to come on the debit side. 124,000. So with that, if you add the debit and the credit, you're going to see that we are not having the same amount of the debit and the credit. So the balancing figure now, the balancing figure is on the debit side. So basically, that's where we have the balancing figure. So if you say 639,960, basically, if you say 639,968 plus 27,870 plus 14,000 minus 124,000 minus 468,513, you are going to get a balancing figure of 61,455, which we are going to regard as a replacement of plant and equipment. So we going to put that one as replacement. Replacement of plant and equipment. And then the amount that we have, 61,455. So this is a replacement, so it's an outflow. So we're supposed to show it as a negative. So these are the adjustments that we have. So with that now, we can find the net cash flow from investing activities. So of course we can close, whereby you say 124,000 plus 5,791 minus 6,676 minus 61,455. Then we get a net figure of 186,340. This is the net figure that you are supposed to get. Is already inserted as a pre-entered figure. Then we go to cash flow from financing activities. So financing activities, we are looking for items like loans, changes in loans. So we check in terms of what we have in terms of our loans. We see that in terms of our long-term borrowings, there is an increase. So when there's an increase, it's an inflow. It means we have received money. So we now say 214,024 minus 198,248. So we are saying long-term borrowings. Uh, this is increase in long-term borrowings. And then in brackets, we show the calculation 214,024 minus 198,248. So these are the figures that we are taking from here. Long-term borrowings, a movement that we have 240,024 minus 198,248. And the net figure that we are supposed to get is 15,776. 15,776. Then with that, we also include the other movements of another loan that we have. We've got a short-term loan that we have, which is a movement of 21,800 to 60,540, which is an increase again, which we are going to calculate by finding the difference. So we are saying increase in short-term loan. So in brackets, we said 60,540 minus 21,800, which is an increase, which is indicated by the movement that we have here from this figure, 21,800 to 60,540. And we calculate, we see that we are going to get an increase of 38,740. So these are all positives. So we add the two, which are supposed to get 54,516. So basically, this is what we have, guys, according to this question of statement of cash flow. Thank you for listening, and hopefully the video was helpful. And please let's not forget to subscribe and share. Let's not forget to share the link to our colleagues who are doing financial accounting in 6. Let's meet again in the next video.